Hi, I'm Daniel Hunt, certified legal specialist in estate planning, trust, and probate law. As older people begin to lose mental and/or physical capacity, they often need help from family or friends to manage their finances. If you know an elderly person who's receiving help with their finances, it's important to learn the signs of financial elder abuse and how to stop it. Discerning financial elder abuse can be tricky, with ample gray area. Is your 80-year-old father's new 40-year-old girlfriend just trying to help by paying the bills? Or might she be taking advantage of his vulnerability?
Might we see my brother?
No, he doesn't want to see you, any of you, or that.
Is it okay for your mother to make large monetary gifts to her caregiver who complains about financial challenges? Or is your mother's altruism draining her own financial resources?
I own you, and I will drain you of your money, your comfort, and your self-respect.
The legal definition of financial elder abuse of an elder or dependent adult is found in the California Welfare and Institutions Code, section 15610.30. This section defines abuse as occurring when a person or entity takes, secretes, appropriates, or retains real or personal property of an elder or dependent adult to a wrongful use or with intent to defraud or both. If an individual assists another person in taking these actions, they are also committing elder abuse. In order to be considered elder abuse, the perpetrator must be acting in bad faith. This means they knew or should have known that the elder or dependent adult had the right to have the property transferred or made readily available to the victim or to his or her representative. The representative is usually a conservator, trustee, attorney-in-fact, also known as a power of attorney agent, or other representative of an elder or dependent adult's estate. Elder abuse can overlap in a number of ways with trust and estate law. Some caregivers exert undue influence on the elder to amend their estate plan to benefit themselves. Usually the caregiver's goal is to gain greater power and control over finances by being named a financial power of attorney agent and/or trustee of the trust. Elder financial abuse may also occur when a trustee breaches their fiduciary duties in certain ways. Examples include fraud, embezzlement, self-dealing, making improper gifts, or commingling trust assets with personal funds. Whether you've noticed recent negative changes in an older adult's well-being or financial situation, or just feel concerned that someone may be taking advantage of them, here are some warning signs to identify elder financial abuse. Unusual activity in their bank account, like unexplained large withdrawals, transfers, wires, or funds. Sudden changes in banking practices, for example, adding new signatories to their bank signature card or ATM withdrawals by an older person who doesn't use an ATM card. Abrupt changes to a trust, will, power of attorney, or other estate planning or financial documents, especially if initiated by a caregiver. A caregiver who seems to be asserting excessive control over an older person's finances. Suspicious checks, especially if the signature appears to be forged or the check description is something like loan or gift. New best friends accompanying an older person to the bank. Mysterious disappearance of cash or valuables. Lowered standard of care like malnutrition or unsuitable housing. Unpaid bills, overdrafts on bank accounts, or an eviction notice. Appearance of new, expensive, unnecessary items or services. The older person exhibits confusion or a lack of understanding concerning their financial situation. If the older person exhibits shame or reticence to discuss the concerning situation with others. If you suspect that an elder is being financially abused, here are some suggested steps you can take to address the situation. 1. Talk to the elderly person. Discuss the concerning signs you've noticed with the person you wish to protect. Give them an opportunity to explain their perspective on what is happening with their finances. There may be a valid reason behind their choices. Explain the concerns you have and express care for them. 2nd, report the elder financial abuse to their bank. Bankers can sometimes help stop or prevent abuse. 3rd, contact Adult Protective Services for assistance. Every California county has an APS agency to help elderly and dependent adults who are victims of abuse, neglect, or exploitation. APS also provides information and referrals to other agencies and educates the public about reporting requirements and responsibilities under the Elder and Dependent Adult Abuse Reporting Laws. 4th, seek professional counsel. If the abuse involves an estate plan or trust funds, you may wish to schedule a consultation with a trust and estate litigator who has experience in protecting seniors from financial elder abuse. If you have any questions about financial elder abuse and how to deal with it, please contact our office. Thanks. We hope you found this video helpful, and if you'd like more information on estate planning or our law firm, you can check us out on Facebook, Twitter, or our website that are listed below. If you'd like to contact us, you can do so at 916-488-9788 or at our email info@dhtrustlaw.com. Thanks.